Welcome to today's episode of Heard and Seen Around. I am Rajesh Karipurath. This is my take on macroeconomic and geoeconomic data points, which I find interesting. I hope you enjoy watching it as much as I enjoyed curating it. Cheers.
Pilot, Tower, is there a reason we are being routed around this storm? ATC, yes, the reason is that it's a storm. A committee is a group that keeps minutes and loses hours. Milton Berle, the best way to make $1 million in agriculture is to start with $2 million. Ricky Ponting, to a bowler after a massive wide, if you're going to bowl there, you might as well put a stamp on it and post it. Be nice to nerds, chances are you'll end up working for one. Bill Gates.
What a difference 6 months makes. At the start of 2026, markets were expecting 2 Fed rate cuts by year end. Fast forward to today and traders are pricing 1 to 2 rate hikes instead. A stunning swing of almost 1 percentage points in policy expectations. That's a major rethink, driven by a more resilient economy and stubborn inflation. Markets have gone from asking when will the Fed ease to are they done tightening. It turns out predicting central banks is a bit like forecasting the weather, with more spreadsheets and just as many surprises. The global easing cycle is still in charge. It is no longer a one-way street. New Zealand just became the latest central bank to raise interest rates by 25 basis points to 2.5%, its first hike in 3 years. Overall, 21 major central banks have cut rates, while 11 have hiked. The real interest rate picture is equally striking. Brazil leads at 9.5%, followed by Russia at plus 9%, while Argentina at minus 4.6% and Philippines at minus 1.7% still have deeply negative real rates. It's a reminder that the inflation fight isn't being fought on the same battlefield everywhere. India's southwest monsoon has finally covered the entire country, reaching full coverage on 9th July, about 3 to 4 days behind schedule. The good news, rainfall has improved significantly, with the deficit narrowing from minus 35% to only minus 15% in just a few weeks. Now comes the crucial stretch. The next few weeks will determine crop yields, reservoir levels, hydroelectric output, and even food inflation. The monsoon may have arrived fashionably late, but farmers will be hoping it stays for the full show. As Mark Twain said, climate is what we expect, weather is what we get. India's ports are getting busier, and that's usually a good sign for the economy. Paradeep leads the pack with 150.4 million tons of cargo, narrowly ahead of Deen Dayal at 150.2 million tons. JNPA, India's largest container port, handled 92.1 million tons, followed by Visakhapatnam at 82.6 million tons. Strong port traffic often signals healthy trade, manufacturing, and infra activity. After all, ports are like the economy's pulse. If the ships keep moving, chances are the economy is too. As Peter Drucker said, what gets measured gets managed. Emerging markets are soaring, but not everyone's invited to the same party. Taiwan and South Korea, which together now make up nearly 50% of the MSCI EM index, is trading at hefty valuation premiums of 85% and 72% above their 10-year average price to earnings. Meanwhile, China sits at an 11% discount, while India is broadly in line with its long-term average. So the emerging market rally looks broad on the surface, but underneath, it's increasingly powered by a handful of expensive AI winners. It's less an emerging markets rally and more a semiconductor fan club. De-dollarization makes for a great headline, but the data tells a calmer story. Total US credit to households, businesses, and governments has actually fallen to 249% of GDP, back to pre-COVID and near pre-global financial crisis levels. At the same time, global investors aren't abandoning America. In fact, private foreign institutions are buying US treasuries at record levels, even as official sovereign holdings have eased. The dollar's obituary may be getting written a little too early. After all, when uncertainty rises, investors still seem to speak one language, US dollar assets.